Hey everyone, welcome to the weekly review. This week went more or less as expected. We went up to the gap area, got rejected, mapped out the Q4 areas with the open here, midpoint at 428, and we can see that the bounce this week actually happened at the Q4 open. So we gapped up on Friday, then went back down, and the open area was the bounce area. Actually, yeah, that's fine. And we bounced on the open, and this is the area, the key area to watch moving forward as well. Um, Pretty scary Friday because of VIX. We had VVIX at plus 20, VIX as plus 15, and it's looking quite scary. And I'll talk about VIX specifically and why is that. But in general, we have a bearish scenario, we have a bullish scenario, and that's kind of it. Like this week is pretty straightforward. Uh, Things look pretty scary, and I'll explain why, like I said. But let's look at all the other stuff that I had drawn previously. Looks like a backtest of this trend line here, getting rejected from it. And I think the previous pattern that I drew was this one, which we can potentially still get if we bounced on the Q4 mid or Q4 open again and then start going up again. But it won't be next week. It will be probably towards the end of the month. This would move further down. But for now, it's looking bearish. And let's look at VIX first. Well, more or less, there's this pattern with big green candles that pierce several resistance level, and this is very close to that. Like we have this candle here, it went through 18, it even went above 20 briefly, and it got rejected a bit, but still this is the body of the candle is very large, meaning we don't have a large wick, and is still above us at a support level or a resistance level, and this pierce of 20 is still pretty good. To get idea of what I mean, like this candle here, big candle, low small wick relative to the body, and it had follow up afterwards. Or this candle here, it didn't stop after this candle, it went up again. This candle here or this candle here, again, it didn't stop there, it kept going up and up. So there's this pattern with VIX in which once you get a big candle that pierces a resistance, it has the tendency to keep going up. And on Friday we had the market was pretty stable relative to the VIX move, but that's just that can turn very easily, meaning we can get a day like Friday in which even though VIX spike, SPY or Qs didn't drop that much, and then the following day we have like a -3 day, something like that. And this is what the scary thing is. We'll see how it follows up on Monday. But given that it will be OPEX week, I would be very cautious next week with what happens. Then, aside from this, mega caps look like shit. Meaning they tried to go up, they got rejected where they were supposed to get rejected. This is Tesla, and got rejected at this upper trend line here. We have Apple, which got rejected at the upper trend line here, and this can easily follow through and go as low as this. Like again, talking extremes, not that it will do so, but it's a rejection at where the rejection was supposed to happen. Sorry, and same for Nvidia, approximately a resistance at this combo level here from this trend line plus the mid the midpoint of the channel. Google went to this resistance area Amazon horizontal resistance and maybe gap fill, attempted to gap fill and getting rejected. Microsoft getting rejected here. Meta same. Netflix going down. Some was good because oil went up on Friday, but some is usually on a counterpoint to the rest of the mega caps. But as you can see, mega caps are getting rejected exactly where they are, and this looks more like the beginning of a move than the end of the move. So that's why I think we should be cautious for next week. It will depend on earnings. We have Netflix and Tesla as the mega caps, but the earnings season is starting in full next week, and we have to see what will happen. Even banks, which posted decent earnings, uh, kind of didn't do that much. Like let's take Schwab for example. This looks like a backtest rejection. So it's this. This is what it looks like. Like see this backtest, new leg down. So this looks like a new leg down kind of thing. XLF, same thing. We have this major level here. This looks like a backtest. One rejection, second rejection, third rejection, fourth rejection, and this one is with an uglier candle. So this kind of looks like a rejection. And if banks goes down, if mega caps go down, it's already looking like a very uh, potential ugly week. My God, the rejection on JPM, the rejection on Citi, Goldman Sachs. These things don't look good at all. Like they look like they're about to start another leg down. And mega caps won't have a leg down. I mean, they will have a leg down. It won't be like a breakdown or anything, but still, there's plenty of room for all of them to drop, and they could threaten critical levels relatively soon. So if the VIX blow up has follow up on Monday, if the market uh, going down has follow up on Monday, it could be a very, very scary drop. Like it won't be 0.5% on SPY, it will be like 2.53% on SPY if there is follow up on Monday and the VIX doesn't quiet down. Um, and this being said, let's map it out. This one I will hide. And what do we have? So most important levels, combo of Q4 open and this week's low. This will be the first support. I'm pretty sure any type of weakness on Monday will see us test this. But this is a very, very small drop. This would be like a fake move up on VIX, and then we bounce, and VIX gets crushed, and we start a rally that takes us to retest this area here by end of the week. So this is a very mild drop. This is not the breakdown I'm talking about. Now, if this doesn't hold, this is 1%, it's gonna be quite bad. And I expect to be like a soft drop, not a soft drop, a soft loss of the level. Like we go down, we retest the Q4 open, and then when the Q4 open gets rejects the move up, then we crater and we go back to 420. So this is the base scenario for the bearish case next week, meaning a retest of the lows, and we shall see if 420 holds. If 420 holds, which is the expected outcome, we get a bounce and we start going up again. We'll see where we stop in November. I don't know. But this is the main scenario for next week, meaning a retest of 420. Uh, okay, now the mildly bearish scenario is we hold the Q4 open, we start going up, and by end of the week, we retest 437. This 420 move is also the base case moving forward as well, because any move down should stop at OPEX. If OPEX finds us at the lows, and the lows would be like 420 area, of course it can go slightly below like 418, 419, something like this. Um, if OPEX finds us at this level, in theory we should reverse up, and OPEX is here. So these are actually not drawn time accurate, but you get the idea. I'll try to redraw them accurately. It's difficult to do so on the daily. So we go here. This would be like a Monday move. So we drop on Monday, and on Monday we also bounce. Probably do something like this, 430, 445 by Friday. Uh, and then maybe do this, start going up again. Okay, so this is bounce on Q4 open. If Q4 open doesn't hold, we will stay weak for the entire week. And let's say we go to 420 for a retest of the lows. After OPEX, we should bounce and do at least a dead cat bounce. So something like this trend line here. This is the minimum bounce we will see from 420. So let's say this is again way too long. Time-wise, it's not time accurate. We go here, and next week we see something like a 430 again. And when we retest this, maybe we go down, maybe we break out. If we break out, this bear move is finally over, and we probably go up for the rest of the year. If we get rejected, maybe 400, maybe 410, 412, we'll see. But these are the two scenarios. One, we go down to the Q4 open and bounce, and then go to 435 by end of the week. Or if we do not bounce on Monday or Tuesday at the latest, it means we retest the lows by Friday, and then reverse next week, because OPEX effect will see the puts expire, and I don't think they will be reloaded for October, going into November and the end of the year potential rally. So this is it. Nothing too spectacular this week. Uh, this VIX move should make you be a bit on edge. 20-year so far proceeding as relatively as expected. I don't know if this move up, the single day move up plus 3%, is enough to my my expectation was something like this, and I don't know if the single move up of 3% signifies a lower high. I mean, it is a lower high uh, technically, but I don't know if we will do this anymore. This could have been that, like move up and then do this. DXY, this is a huge, huge divergence, and I think DXY will reverse down. Have a head and shoulders as well. Yeah, head and shoulders, neckline here, and we should target this for the correction. Should be this level here, 104. Okay, oil. I don't know for oil. So we bounce here, retested, and bounce. This is a solid bounce. It should go for a while. Might even be a new leg down, a leg up to 105. At the minimum, it should be a retest of 93. So either this or this. Okay, I think that's it. Gonna be short this week. Until next time, have a good one. Bye bye.